What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is June 28th of 2021. Well, folks, I hope you are having a fantastic day wherever you are, and in today's video, I want to dive into a very important question. I know for many of our videos, as well as other content creators out there in the YouTube space, a lot of people have been debating on the question of whether or not we're in a mid-cycle correction or a full-scale bear market. And when emotions are running high, people can be very opinionated on these questions. However, I want to focus on a much more substantial question, and it's a one that's much more rooted in the realistic nature of what we care about when we're investing in any market. And that is the ultimate question of whether or not Bitcoin at this point, after the correction that we've seen, whether it is the beginning of a bear market or we are just at the tail end of this correction and ready to move higher in the coming weeks or months, the question remains, is Bitcoin a buy or hold, or is it a sell at this price range? Does one side seem more favorable? And outside of that, we have to ask another important question. In this inflationary environment where asset prices are generally moving up due to the printing of mass amounts of new money, is there a better opportunity in front of us? Can we put aside our emotional ties to crypto, and are there better markets to expose ourselves to? That's the most important question to ask ourselves, the combination of those two versus whether or not we're in a bear market or mid-cycle correction. Anyways, I've rambled on enough, but I want to go ahead and dive into this conversation here. And outside of that as well, I just want to share with you guys, for context sake, I am on a water fast that I started back on Friday, so I'm a little bit out of it in this case. But you guys know I've always been a little bit out of it in this case. I'm always a little bit different than others in my perception for the markets, etc. So if you love what I produce here in this case, perhaps you guys can have some patience with me here today if I take a moment to put my thoughts together. So thank you guys. Anyways, let's go ahead and dive into it. And I want to start by exaggerating on my favorite analysis here, which is looking at longer term time frames. My preference here when it comes to analyzing markets. I am a macro trader. I build positions in this case where I hope to hold them or have general exposure to a market or trend over a time frame of 1 to 3 years. Plain and simple. Right? And overall, historically speaking, for Bitcoin here, which has really only been trading since back here in January 2011, it's been one of the best performing assets over the last decade, from 2010 to 2020. And it seems like we've been continuing this trend throughout 2021. Right? Even after the correction that we've had here over the last couple of months, from here, basically back in May in this case, really about a little over a 1-month correction and general sideways set of price action, Bitcoin is still up over 18.58% this year, right? And not to consider just what's happened here in the year, right? This would be hypocritical to just focus on 1 year. We want to focus on the general annualized return here for Bitcoin. These massive moves here that we've seen, and just really over the last 3 years in cryptocurrency markets, right? Coming here from the lows at 3,000 and bouncing up here 94% in 2019, 304% in 2020, and not to mention the considerable gains we made earlier, we've now faded down towards around 18.5%. We're still up for the year. Still up for the year for Bitcoin. Now I understand it's been well over 6 months here into 2021. But the massive correction that everyone's talking about is an 18.5% upward tick in the year for Bitcoin, right? Let's go ahead and first talk about the secondary part to that question, which I think is really important to just ask ourselves. If you're, in this case, confident you're going to be able to pick up the dip, and we'll talk about that a little bit. If you think we're in a full-scale bear market, that's fine. We will discuss about this. But if you're a macro trader, broadly speaking, the question you should be asking yourselves, because in most cases, there are some few moments where cash can be king, where all assets go down. But generally speaking, if you're invested in assets for the long term, let's go ahead and assess our options here. Bitcoin generally has, if we kind of average the returns here over time, usually has anywhere from upper double digit to triple digit returns in a given year. But let's see what other assets do. Let's take a look at that same chart here. Now, just to kind of provide context again, what we've been looking at here is the annualized returns. So this is the 12-month chart here. Each of these candles represent 12 months of price action. Let's take a look at the S&P 500. Well, S&P 500 had a 28% return, 16% return, and a 13.97% return. You know, what I find really fascinating here, and I don't want to doubt, the S&P 500 has done absolutely phenomenal. If you've been long the S&P 500 or the Nasdaq or the Dow Jones, any major indice, or the Russell 2000, all these major equity indexes that give broad exposure to the equity market. If you've been long equities since back here in January 2009, you've done phenomenally well. Even just passively investing, not to mention if you had invested in some of the right stocks, in this case, someone investing in some of the right altcoins. Phenomenal returns here, annually speaking. S&P 500 has done phenomenal. But even this year, or last year, the last 2 years, excluding the third year in this case, have performed under performance of Bitcoin just this year after an over 50% correction in price. Where we're standing right now, Bitcoin has still outperformed from the beginning of this year the performance of the S&P 500 over the last 2 years. And it wouldn't be difficult to see it get back up to a 28-30% or more performance to outpace the S&P 500 for its third past year. And if we take a look beyond that nice pop-up we had in January of 2019 to the close of the year, we had a downward year where the S&P 500 was down 6.2%. We had a year here where it was 19.42%. And then it starts to go down to much more moderate ranges, low double-digit ranges or single-digit performance annually. Not bad if you can get it. It's not bad at all. Nothing to scoff at. But considering inflation, the printing of money, and what you could have had in other markets, well, in this case, the S&P 500 doesn't look as sexy as Bitcoin in the sense of returns when we're taking a look at that multi-month, year to 2 year, 3 year time frame. Let's go ahead and take a look at the close competitor to Bitcoin, at least gets talked about a lot, which is gold. Right? Gold here, since the 90s, late 90s, had its nice major uptrend here, right, when it went through a bull market back here from the early 2000s here towards January 2011, or the year of 2011 when it actually started to top out and enter into a bear market. What's really interesting here is that gold had some great returns here, right? Mainly in this case, not every year, but many years maintaining nice, solid double-digit returns, annually speaking. And gold itself has even started to swing past the previous all-time highs and look like it's just about to pop into another bull market. But let's just take a look at even the most relative time frame in the long term, a couple years here of price action. Gold here in January 2016, full year's price action, 8%. Next year, 13%. Next year, neutral, generally around negative 1.57%. Next year, 18%. Next year after, 25%. And this year, minus 6%. So far, we're about a little over 6 months in here. Right? Or technically speaking, sorry, we're in mid-June. And see, this is the effects of water fasting. You can get yourself a little bit caught off guard. Generally speaking, a little over 5 months here. I want to ask you all something here. Do any of these returns sound anything like we'd expect with Bitcoin or crypto? Now, I understand if your time frame is the hourly or daily chart, if you're day trading this market and you got caught, in this case, on that downward swing, you bought at the highs or around the 50, 60K range, now you're down here in the 30K range. Yeah, it's going to be brutal if you're trying to day trade, and we don't really advocate for that here on the channel. I don't want to give financial advice to anyone. I don't want to tell you guys or discourage you guys from trying new things, but I can tell you all this. I've been in markets for the last 9 years to 10 years, investing on my own, from equities, commodities, Forex, and crypto. And I got to be honest with you all. I don't day trade. And this isn't the perspective that I want to provide here because I genuinely don't believe that it's best for most people. So let's just take it as it is here. If you're investing on an annual basis, 2 to 3 years, does anything here look as sexy as the opportunity of Bitcoin? It certainly doesn't to me. And the numbers themselves don't lie. Even if we were in one of these optimistic bull markets here for gold, or if we had to start to get these healthy double-digit returns, generally speaking, even considering the massive corrections Bitcoin can have, the returns just don't match up because Bitcoin, in this case, we're talking about market to scale, has so much more room to grow than gold, which is already a 12 to 13 trillion dollar market, than global equities in this case, where overall, if you're talking about global equities, you're talking about a $100 trillion plus market, and that's the conservative estimate and range, right? Consolidating massive markets, not to mention real estate markets that are hundreds of trillions of dollars. Bitcoin as an asset is ranging probably at the moment around a $800 billion valuation. We can get the official metrics on CoinMarketCap, etc. But that's really besides the point here. The difference and divergence here between valuations is absolutely significant. But I want to talk about something very important here. I want to play the absolute devil's advocate here, to my opinion. As many of you guys know, I play more of the optimistic tone that we're in a mid-cycle correction. I'm playing off of the narrative, generally speaking, and just kind of ignore the drawings I have here. We'll dive into it in a moment. I'm playing off the idea that we are at the near absolute low here, and that slowly but steadily in the next couple months, we're going to start to break higher here. In this case, whether it be in 2021 or 2022, we're going to eventually break up here and continue higher, right? Ignore really the time preference there, but generally speaking, a couple months, right? That we're going to get back to those all-time highs. That's the narrative I've been trying to drive for a long period of time, that I believe the data science models, price analysis, historical correlations point to the fact that we're in a mid-cycle correction, one that was just overextended due to leverage trading. But let's go ahead and wipe out my opinion. Let's say that I'm absolutely wrong, and in this case, the full-on bears are right. Let's say that they're right in this case. Right? For those of you out there who hold that bearish narrative, I want to go ahead and play devil's advocate here and map out what may be a very realistic scenario in some of your guys' minds. Right? Let's go ahead and theorize that for a moment, at the price point we're at, we're going to do something we've never done in history. We're going to come down and have not only a full 70% correction, near around the historic 80-90% we correct, but come down here to the all-time highs. This is what a lot of people have been kind of theorizing in this case, that for the first time in history, comparative to all other cycles that Bitcoin has gone through, we're going to come down and we're going to be able to come back down to the previous all-time highs. This has never happened in history. We didn't do it here. We came down here to 3K, which is far away from the $1,000 all-time highs back here in the previous cycle. And as we came down here, we came nowhere near any of the previous high ranges down here from the previous cycles, right? So overall, right, this has never happened in history. But let's say it happens. Let's say that we truly have an overextended and over-leveraged market. We ran up too quick, and just going forward, it might be more normal for Bitcoin to come down to the previous all-time highs as there's a decay in returns. Fair point, right? So let's say that we go into a 52-week or full year bear market, considering from where we are now, an even longer and extended bear market than we've ever seen. Right, or at least than what we saw last time, right? And back in 2017, right? We had a full-on continuation here, another 45% correction here, down to 20K, roughly speaking, right? Afterwards, we would expect an exit out of the accumulation range, right? And this is a very rough estimate here. I'm just playing theoretics here. Let's say it takes us all the way to December 2024 before we hit those new, fresh, all-time highs, right? Playing in the idea that we are in a bear market and that it's going to take, in this case, a year and a half in this case, to really come down and start to exit out of the accumulation phase, send those higher lows and higher highs, break past 65K and go up here towards 150,000. It's somewhere in the middle between the high expectations that some were shouting on YouTube that would happen in a year, it would happen any time now, right? In this case, we're expecting that this is going to happen way later, closer to 2025, somewhere between 100K, 200K. There's new exponential returns. But exponential returns, bear in mind, that are just around 2 to 3x from the previous all-time highs. Much lower in this case than multiples than what we've seen here, right? We're estimating here overall that historically speaking, we're only going to come up here towards around 150K. Let's just keep that in mind over a multi-year time frame. From this point on, if you bought in today, and you didn't just wait for that discount range, sure, maybe you could pick the lows here in this case, right? We've got plenty of time to dollar cost average or build our positions and expand our crypto portfolios. But let's just say here today, the price range we're at right now, you'd be able, in a matter of a couple years here, technically a little over 3 years, to be able to make a 353% return. Now I want to ask you all something here. And I'm not saying to put, let's say today you've got a lump sum of cash of $100, $1,000, $10,000. I don't believe in just putting your all-in position right here, right now. Right? That may definitely not be the best case scenario, even if we start to chart up here. The risk of there possibly being a bear market can make it favorable to average in over time. But from this range down to a potential low range here of 20K, where there's no guarantee that this is going to happen, just like how there's no guarantee we're going to pick up here today as a mid-cycle correction and continue back to all-time highs the next couple months. There's no guarantee of either of these scenarios. So what can you do to hedge your bets? The realization I want to make here today, a very, very clear point that I want to drive home, is that at the end of the day, there are no other markets from this correction point for Bitcoin. There are no other markets that are going to provide the annualized return that is going to lead us up 353% over the next couple of years in the sense of our net worth or our initial investment. Plain and simple. I can tell you guys, for gold to do something like this, and I just want to ask you guys honestly, because you might disagree with me here. I'm going to remove some of my drawings here just so we can get a nice clear picture. I want to ask you guys very clearly here. Use the same date and price range tool. From the exact point we're at right now, for gold to be able to do that same type of return, let's say we're going to give it, just to keep realistic here, right? We're going to give it till January of 2030 in this case. Let's see here, 350% return around the same range. We would be expecting gold to be at $8,000. Could it happen? Well, maybe over this period of time. But look at the time preference, right? If you wanted to talk about doing it over the next 3 or 4 years, you're expecting gold is going to be moving up this much. I'll just go ahead and just kind of maybe draw it with a polyline tool to kind of put that perspective in mind. A already $12 trillion asset class moving up close to probably around $40 to $50 trillion. We haven't seen a move like this in gold since back here, those kind of multiples, right? Since back here in the 70s. And it tends to be that markets have decaying returns over time. This goes, generally speaking, for equities, for commodities, for cryptocurrencies like Bitcoin, right? Let's go back, take a look at the S&P 500, right? Play with those annualized returns, right? Let's say, going off here with the date and price range tool, right, that we have a 350% return, like Bitcoin, just over the next 4 years, right? I'm going to drag that down a little bit, get it more consistent. There we go. We're looking at the logarithmic chart, folks. You see any period of time where in 4 years we did something like that for the S&P 500, where we went against the norm of the already pretty decent returns that you can get in the S&P 500? Anywhere. We're going back to the 1800s here. Perhaps, maybe we get something similar to the Roaring 20s. But even that in this case, right? Even this, the Roaring 20s, right? From top to bottom, similar range here. After a sideways consolidated market, this was seen as peak euphoria back in the Roaring 20s, peak wealth creation in the S&P 500 net equity markets. Are we going to have that after already climbing here from 666 points on the index up here towards 4,200 over a little over the last decade? It just doesn't seem very probable. And that's the really great thing about buying Bitcoin and cryptocurrencies at a discount. So long as you're buying fundamental, time-tested, and liquid plays in the market that aren't outright scams or failed projects, you can have great confidence here that on any decent correction here, even if you dollar cost average and have some buys up here and they might be down in the red for a little while, even in the worst case scenario, overall, if you're confident that Bitcoin is going to continue to make new all-time highs, play out historically as it has, and rebound back stronger than ever, whether it's a couple months or a couple years from now, Bitcoin is still overwhelmingly at this point, due to markets of scale and due to the potential of cryptocurrencies, one of the best market opportunities out there that I can find. And I say that as a macro investor who's traded for the last 9 to 10 years in a variety of different markets. So, I know I've rambled on a little bit today, guys. We got very theoretical with this one, but I want to really pinpoint the idea of focusing long term. And yeah, I gotta be honest, guys, as a content creator on YouTube, it doesn't really favor me to promote this kind of thinking. Sometimes you won't feel the need to always be watching my content or other YouTubers' content and always be so hyper focused on what's happening today. But that's probably the best thing for all of us. And that's why I'm going to continuously, when you guys come here to this channel, I want to promote that ideology, the ideology of focusing on the long term so you can maximize those returns, not make stupid mistakes, have the best tax implications for profit taking. In the US here, it can be the difference between paying upwards of 30-40% capital gains and just waiting a year for some of your positions to materialize profits, knocking that down to 10 to 20%. Depending on your state, jurisdiction, and depending on the country you're in, but that's the U.S. for example. The difference you can pay, in this case on capital gains, and the difference in the returns, more importantly, that you can make focusing on the long term and accumulating can make all the difference from being profitable and happy and clear-minded versus being stressed out, losing out on opportunities in the long term, these few rare opportunities of bull markets that we're going to get in our lifetime that really can make exponential returns and make life-changing returns in the crypto market. That's the mindset to keep focused on. And I can tell you guys bluntly here today, as I mentioned before, during this sell-off that we've had in the market, I have not sold any substantial positions in this case. In fact, what I did was when we had this dip here, I decided to take out loans in this case to build extra positions. And the important thing to realize is I'm not advocating you guys go do that. You need to make sure you know how to understand, probably use collateral in this case, or using collateral to borrow crypto and increase exposure, knowing that you should have extra collateral on reserves. It's an important thing to do. And outside of that as well, borrowing at the right time frames when there are already discounts in the market where it's favorable to take out credit. All right? Not when we're at market highs like a lot of people did on leverage trading platforms. We didn't do that here on the channel. I know many of you out there followed suit with that idea as well. But anyways, guys, there's a lot of different things to dive into. We can continue to talk about, and we will continue to talk about throughout this week. But I want to go ahead and talk a little bit about one of our sponsors here today, which is AltFins. Now, many of you here on the channel have heard me talk about AltFins before. It's a great tool that you can utilize to screen a variety of different market metrics. You can find different plays throughout the market that are showcasing momentum. You can get clear screener examples of TA analysis on a variety of cryptos. But what I want to talk about here today is a really interesting feature. As we are in a choppy market, and a market that has a lot of sideways price action. As we're starting to focus more on kind of a swing traders market, I want to go ahead and give you guys the opportunity here. Right, if you're looking for discount plays here in the altcoin market, as we've been through this correction, to be able to find those plays as easily as possible. And one really great set of tools here is the relationship between the signals, summary, and screener tools here on AltFins. It's a great additional platform if you happen to be using TradingView. And these are some of the great features here that I want to focus on here today. So the signal summary section of AltFins gives you a really great overview of how many different cryptocurrencies are showcasing certain patterns within the market. You can see that we have a section here of the strategy blocks, we have trading patterns, and what's really great about this as well is that we can go through and dive into other patterns or create our own sets of patterns to watch in the market. But overall, just analyzing what AltFins in this case gives us for trading in this case is taking a look here at the variety of major trends here from momentum, ranges going up or going downward in this case, signals of momentum, etc. And we can see that on the bullish side of the table here, we can see the number of cryptocurrencies that are being currently scanned that are showcasing signs of momentum on different time frames. And what I really like to focus on is those longer term time frames. I think they're much more substantial because I'm not trading in the markets every single second. Right? So we can take a look here at momentum plays. Right? There's 211 cryptocurrencies on the daily chart here that are signaling momentum. And what this is going to pop us over to here is really getting a good idea of what plays are in a strong uptrend here, right? And we can see a variety of different cryptocurrency tokens. Now, one of the problems that you might run into in this case is that we're filtering from a large database of cryptocurrencies. So maybe we want to set some standards in this case, otherwise known as filters. They're going to help us to actually find those opportunities we feel comfortable investing in. So we'll go here to the signals and filters section. And let's say, for example, I want to add a market cap restriction. Let's say that we want to set a standard that the market cap in this case for the cryptocurrency we're buying into must be over 250 million in market cap. 1, 2, 3, 1, 2, 3, 1, 2, 3. There we go. We got the perfect amount there. 250 million. We add the filter, save as. We're going to go ahead and make this market cap filter. Click save, click done. And now our filter is applied here where it really starts to cut out a lot of the noise here. We can see what plays are up in the green here, and outside of that as well, what plays are down here in bearish downward momentums, right? Perhaps maybe these are some candidates like Compound or Decred or CRO token or Loopring or CLO in this case, right? Some of these more downward plays we might want to keep on our radar for signaling upward swings that might be at solid discounts, right? But at the same time, we might want to play off momentum here, ignoring some of the stable coins here in the market that are signaling uptrends, right, that are holding out well and probably deviating from their average trend of around $1, right? We might want to keep an eye on some of these momentum tokens like the Shiba token, etc., CLO, which is making some moves, etc., Quant. There's all these different plays here that we could keep an eye on. And you can add custom filters. You might decide in this case that you guys want to add other filters here. But what's great is that the signal summary tool leads us over here to the screener tool where we can start to filter things to our liking. We can search up specific cryptos. We can add our own filters here. I used a market cap filter from the default kind of momentum signals that AltFins uses, like traditional trading platforms. But what's really great here is we can really dive in to oscillators, to indicators. You can see all the different options here that we have to choose from where it'll allow us to screen for different plays that meet the standards that we're looking for. And that's the really cool thing about AltFins is the sheer range of customization. Now what's really great here as well is that I can also hit the refresh tool so I can always keep up to date here. I can dive over into the chart section where I can see a variety of charts here and where my indicators are flashing buying and sell signals for these cryptocurrencies, so I can start to spot these trends earlier on and make sure that I catch these buying opportunities before they really move higher. But overall, having the visualization here of diving into these cryptos is so nice. We can even expand here to really get a full-scale chart on our screen. We can look at different time frames. We can really start to expand out on the price range and expansion of some of these cryptocurrencies, etc. So overall, guys, that's it for our kind of dive in to AltFins here today, but it's one of the many great tools that you guys can check out if you end up signing up for an AltFins account down below at the link in the description. But that being said, everyone, thank you all so much for watching. I hope you guys enjoyed today's video, not only our discussion about AltFins, but really diving in here into this conversation about longer-term time frames. I'm so excited to focus on what's to come here in cryptocurrency markets, and even if this turns into a red year here, keeping it as honest and blunt as simple and possible. If it ends up being a bear market here that we step into, the great thing is I know that generally speaking, on the longer term time frame, I'm best exposed to the cryptocurrency markets. Thanks so much for watching, guys. Have a wonderful rest of your day, and I'll see you all in the next one. Take care, everyone.